Chat out.
We live?
Yep, yes, sir.
Yo, what's up, man? Appreciate everybody tapping in the stock plug investments, man. Where we teach you about the basics to the stock market and how you can learn how to eat in this crazy stock market on your own. You don't gotta go asking somebody what place should I get into. You don't gotta take everybody advice and be looking crazy when it don't go the way they said it. You can learn how to find a play on your own. And if it work out, you feel good. If it don't, you still cool because you can't blame it on nobody but yourself.
Sir.
You know what I mean? That's what we're here for, man. We want to teach everybody how to do this themselves. We want to be able to have y'all self-sufficient. So if we ain't here to do this no more, y'all can still eat. Or if the people that's out here yelling out plays, can't do that no more, y'all can still eat. That's what it's about, man. Being able to feed yourself, plug yourself. Hence, stock plug investments. So as you can see in the title, today we're going to be talking about how you can take profits, the best way to take profits using some of the widely known indicators that most traders use. Those indicators being today, today we're going to talk about the RSI indicator along with the Bollinger Band indicator. This is two widely used and highly known and favored indicators. And we're also going to talk about what exactly is an indicator. You're going to get into that as well. And then we also got a profit-taking strategy to share with y'all that I personally implemented myself. And since I started using it, it's been real good in the market for me. I ain't even going to hold you. But we could start off with some question and answers. So if you got any questions, I'm about to pull it up, bro. It's all good chat box. If you got any questions, just put them in the chat box. We'll be glad to answer them. You got any questions about Dogecoin, Ethereum Classic, which went crazy today? That boy went crazy today, bro.
I can't believe it.
We got to tell him, bro. We was in that at $7.
Man, I was in at 5, bro. Selling at 7.
Tell you, like, yeah.
That was the resistance around 7. It did not want to go over 7, man.
Yeah, it was barely moving then. It was crazy. It is what it is, though, man. I ain't tripping, man. We still gonna eat.
Yeah, we might got any questions on the last video. Anything.
Yeah. That we might have on that. Let us know. We answering questions right now, but yeah, as you can see from the title, we talking about taking profits today. And truth be told, man, a lot of people think it'd be easy to take profits, but that's probably the hardest thing to do in the market.
Bro had to tell me, go ahead and take profits, man.
It's the hardest thing to do in the market, bro. Taking profits is hard, man. People get greedy and all, man. It's hard to take profits if you don't got a systematic way of doing it.
Yeah, man.
For real, you gotta have a method to the madness, man, or it could definitely get out of hand. For sure. This is what I'm looking for right here. Boom. Okay, bet. Yeah. So today we're gonna go over some charts, show out how to use two of these indicators, relate that profit, because that's important, man. You, no matter how much you trade, if you don't never take profit, you'll never win. So we're gonna show y'all a nice, responsible way of doing it, to where you can still let your stocks run without risking the majority of the money you made. So we got a good, and we're gonna get to that today for sure. But in the meantime, bro, go ahead, hit them with Hit them with these definitions real quick, big dog.
For sure. Y'all can still ask questions if y'all want, but we about to get started. We about to start off with the RSI indicator. As a matter of fact, let me tell y'all what an indicator is first.
Yeah.
So y'all know what that
if
is.
You can zoom.
I'm on Wikipedia right now. You was about to say what, bro?
If you can zoom in too, because it look a little small on the live.
Would I be able to do that?
If not, it's cool. You're gonna read it out anyways, and I'm gonna explain it anyway. So
got it on right here. Yes, sir. You see that?
Yeah.
Okay, so basically an indicator is just on Wikipedia right now. They say that in technical analysis in finance, a technical indicator is mathematical calculation based on historic price, volume, or in the case of future contacts, open interest information that aims to forecast financial market direction. So yeah, that basically sum it up. An indicator is a tool that they use based on historic price, volume, and future contacts like open interest. And basically open interest is however many people is buying it at a certain amount of time. And they use that information to determine where a stock is going. So that's basically an indicator. And it's plenty of indicators. We about to get started with RSI. That's an indicator. Bollinger Bands. That's an indicator. And really, it's probably like thousands of indicators. Ain't it?
It really is. Yeah.
When I go on trades, I be seeing a whole lot of different indicators. Yeah. I only know a few, but these the really important ones.
And before we even get into these indicators, I don't want y'all to overthink these indicators, because once you start learning what each indicator means and is used, most people tend to want to use as many as they can before they get into a trade.
Right.
What that wind up doing is it give you what we call in the trading world paralysis by analysis. So you starting looking at so many different indicators and they all telling you different things. They start to contradict each other, so you don't know what to do no more. So you just be stuck.
Right.
So you don't want to use 5 different ones all the time. You want to just stick to like a few on one or two that work for you consistently. And you know what I mean? That be your go-to. But you can look at the other ones, but the one that you mess with the most, that's the one you need to rely on.
Right.
Because it happens so many times with a lot of new traders. They get to learning and stuff and they get stuck because it be like one thing saying this, another thing saying this. And so keep that in mind when you're using these technical analysis, because it definitely can get real murky. Like it can get real confusing.
Yeah, all indicators is not completely accurate. You know what I'm saying? They just going off of history, price, and volume on some mathematically on something. So it's not completely accurate. So remember that on something. Like bro was saying, don't be looking at 5 different indicators trying to figure out where this stock is about to go. One indicator might say the other than the other indicator. So yeah, it's just these are the ones I like to use, the RSI and the Bollinger Bands. These are ones good for me. So it might be good for you, might not, you know what I'm saying? But we still gonna let y'all know what it is, how to use them, implement them, and show y'all how to get to them, how to use them on TradingView. Got a few more people joining in. Y'all got any questions? Y'all go ahead and ask us.
Yeah, I'm still sending it out to a few people. Yep. Yeah. But so let's keep going, bro. Let's keep going. You know,
we done told y'all what indicator is. Indicator is basically the tool that they use to determine where a stock is about to go. And the first indicator we about to discuss is the RSI, short for relative strength index, RSI, and it say the relative. Let me zoom in so y'all can see it right quick.
Yeah, zoom in on that relative strength index, man. Let them know what that is, bruh.
Okay, so the relative strength index, RSI, developed by J. Wells Wilder, is a momentum oscillator that measures the speed and change of price movements. The RSI oscillates between 0 and 100 traditionally, and the RSI is considered overbought when above 70 and oversold when below 30. Signals can be generated by looking for divergences and failure swings. RSI can also be used to identify the general trend.
Yep, that's facts.
Yeah, so this is a small chart right here at the bottom. Basically, y'all, if y'all look to the bottom right here, y'all see 30, and go to the bottom left right there. It reached 30, and 30 means that it's oversold. So yeah, when it's oversold, most likely it's gonna go back up around the overbought area. Whenever it's above 70, that's overbought. Below 30 that's oversold on something. So you want to get in it when it's oversold on something, so you can get that swing when it's going up to overbought. We gonna tell y'all what calls and puts is in another video. But basically, if it's ever overbought, like a lot of stocks right now in the market, overbought, y'all can bet on them going down. So that's a put. We're gonna tell y'all about that in another video. But yeah, you basically can make money on it going up and down. Below 30 in the RSI, it's oversold. Above 70 for the RSI, it's overbought. So that's basically what that is.
And a lot of people use this for like swing trading and mainly it's swing trading and day trading, because it tell you when like it's a good indicator for when to get out. Like you can even look at this chart right here on this example. Like you can see when the stock took the dip and it went under 30 and it was oversold, it immediately started going back up after that. Like that's exactly how you use it. And then even at the points where it's like tapping 70, I mean, it's becoming overbought and the stock will actually take a dip. Like even in this chart, when it's oversold, the stock took a little dip, and that'll be a good time to take profits, let it dip, and you can get back in, so that's a good strategy for taking profits, man. And it all depends on your time frame too. So we talked about time frame yesterday, like you want to pick a time frame that you're gonna trade in, and you know what? I need to post that actually, bro. I'll probably post that today. Actually, the time frame snippet, so people can know what time frame for whichever type of trade they want to do.
Right.
I gotta remember to. But yeah, you want to use these time frames, and depending on the time frame you're using, it'll let you know like if it's a good time to get out of a trade or whatever. So keep that in mind when you're using this RSI. That it's different on different time frames, but if you stick to one time frame, it becomes real.
Yeah, right here it is just an example. You can't even like see what time frame it's on.
Yeah, you can.
Maybe one or something. I don't know.
Yeah,
as a matter of fact, this every quarter. This quarterly right here. Well, no, is it?
Yeah, because every candle is like a day. Because yeah, that gotta be a day or a week. Yeah, it gotta be a day. I don't know. It don't matter.
It's just an example of basically what RSI is. Below 30 oversold, above 70 overbought. Too many people bought it, so most of the time it's overbought. It's just gonna go back down. You know what I'm saying? So that's basically how that or what that is right there.
Yeah. Touch on you see where it say overbought, and it broke that 70 line. You see how that's where it took the biggest dip too?
Right. Yeah. And as a matter of fact, like if y'all ever reading the charts and it's like back and forth like this, whenever y'all see these small dips right there on the way down, if y'all can see this mouse right here, whenever y'all see these small dips right here, y'all can do something called averaging down. And we could talk about that in another video.
Yeah.
Basically the example of that and all that. But I'm gonna give an example now. Actually, when you average down, you basically buying it every time it dipped. So if you bought it at this point and it kept going, you could have bought it again, and eventually it was gonna go back up to that overbought area. So you average down on the way down, and once it go back up, then you can sell on something. So when it's ever choppy like this, y'all ever looking at a chart and y'all want to get in and make a trade or something like that, y'all can do something called averaging down, and whenever it reach these points, just throw a little small amount. Like right here, when it went all the way down, or right here, for example, y'all seeing all of these supports right here. That's what we call them, supports. When they meet all these lines right here, that's a support. Y'all seeing all these. If y'all would have bought in right here, just like all these, y'all could have bought in down here, and eventually it was gonna go back up to overbought. Like right here, for example, went all the way down, made all of these, y'all could average down all the way down and ate all the way up. Kept going all the way up back to the overbought area. Or something. And that's basically what averaging down is. You just buying it on the way down and reading the charts. You know what I'm saying? And yeah, that's basically what it is.
That's more so buying the dip though. That's more so buying a dip. And the reason why I say that is because
you're right.
You buying the dip because it's still going up. Average down is more so like when it's falling.
Well, yeah. So that's right here. Yeah. This, like you said, it's different on a time frame. So that was just like an example on something.
Yeah.
So like this, I don't know what time frame. Honestly, this
yeah, ain't no telling. I can show them on Trading View real quick, and then we can go to the Bollinger Bands after I show them that.
Okay.
Do the screen share real quick.
Yeah. Go ahead and show them that right quick.
Got you, big dog. All right. Screen share. You gotta make me host, bro.
Yeah, I'm going. All right. There we go. All right.
Let me get the chart ready there. So yeah, let me just show y'all what we was just talking about, so y'all can have a better understanding. Multiple participants. Well, I'm gonna do the screen share real quick. All right, and then it's gonna you can take over as soon as I'm done showing them the RSI real quick. So let me show y'all how to even get to the RSI, so y'all can know yourself. So up here at the top is these right here. It's this F with an X. These indicators and strategies. So you just click on that. And then pop up, but it should pop up on yours, because I already marked all of these as my favorite, so I don't think they even gonna let me look up no more. But when you click on this FF, you can like type in the one you want, and when you type it in, all you do is type in RSI, and then it populate. And the one that's gonna pop, the one you want is the relative strength index one. This one right here. So when you click on it, it show up down here at the bottom. You can make it larger so you can. Let me make this a little bigger for y'all so you can get it. Okay, internet connection not stable is real. All right, so look, this Dogecoin, y'all. I know everybody hyped Dogecoin. Hey,
right. On the hour, man, Dogecoin right now about to be.
I'm telling you, hey,
around the 40.
Hey, you see how it's bouncing off that support though? You see that? Boom.
Right, yeah, definitely is.
Yeah,
that's support right there.
But look, this is a prime example right here. Like you can open it up a little bit. So boom, when the stock was running up, look, it went up right here over 70. Then it took that dip right after it. Boom, all the way up here. Then fell all the way back down here to support. All right, now you supporting me. Let me go back up now. You know what I mean? And this would be behind the dip right here, but it went back over again. Then it took his dip. Now this advanced, but I'm about to show y'all something real quick. But we're gonna teach this a little later. But I just want something so y'all can get familiar with it, and then later on when we do touch on it, it won't be foreign to you. So we talked yesterday about resistance and how the chart tend to respect these lines on the chart. It's the same thing for RSI or indicators too. So this RSI indicator, it also has support and resistance. So you can get right here, get this horizontal line, and you can find support and resistance on the RSI too. And it's gonna respect it. Let me make this a different color. We're gonna go with red. I mean, it's gonna reverse on it. So boom. You can look and see down there on the RSI how a lot of times it come to that red line, then it turn around. Or either come down to it, bounce off it, and go up. Like, did support and resistance work on this too? And that's another good indicator. So keep that in mind. Like, you can definitely draw support and resistance on the indicators too, and they just as reliable as support and resistance is on the charts. So look at that. That's another one right there. Like, and look, it's bouncing off that right now. So honestly, if I had to guess what's about to happen, I think it's about to dip under this support this time, take a little dive, go to undersold at 30, then rally back up. And I'm buying
another support.
Yeah, I'm buying that. All right, so yeah, that's a quick little run through on RSI and using support with the RSI. Now, you can go ahead and take the screen back, bruh, and go ahead and get to the Bollinger Bands real quick, and we'll show them about that.
For sure.
Close that off.
I think you gotta
I put it on multiple people can share, so just try to do it yourself, and it should just automatically let you take over. Or maybe I gotta stop sharing.
Yeah, that's what I had to do.
All right, man, my bad. There you go. It's all you, big boy. It's all you, King.
There we go. Back.
Bollinger Bands.
Yeah, so that was the RSI. So we about to move on to Bollinger Bands now. So yeah, Bollinger Bands. Bollinger Bands are a type of price envelope developed by John Bollinger. Damn, it's really in his name.
Yeah.
Okay, so it's a price envelopes define upper and lower price range levels. Bollinger Bands are envelopes plotted at a standard deviation or deviation level above and below a simple moving average of the price. Because the distance of the Bollinger or of the bands and based on standard deviation, they adjust to volatility swings in the underlying price. So basically, bro, explain this to them on some like in a better understanding.
Okay, I got you. So basically, we ain't even got to do all the technical terms. Like, the simple way to look at it is they doing all the math for you. They tell you, like, if this stock is going up, it could potentially go this high. And that'd be like the top part of the Bollinger Bands. Down there at the example, you see the blue part of the chart is the Bollinger Band. So it can go to the top, and then usually when they get up there, it's ready to come back to the bottom. So they do all the math for you, like predicting how far it can go or how low it can go. You just got to say if you're going to pay attention to it or not. So if it's at the top, you usually want to sell. And if it's at the bottom, you usually want to buy. You know what I mean? Hey, say you buy it at the bottom and it's still falling some more, that'd be a good time to start averaging down till it hit its true bottom. And then when it started going back up, you would start making money faster. So yeah, that's like the basics on Bollinger Band. If it's at the top of the Bollinger Band, we selling. We're not touching it if it's at the top. We just not touching it. And if it's at the bottom, that's when we want to buy it. Because that's when everybody then sold it off enough. Or, you know what I mean? And now people starting to look at it. The real traders or the people that, trade every day, they looking at it like, okay, then, well, this is a decent entry point right here. So let me go ahead and get a small position right now. And
you can go ahead.
So as far as taking profits, like, that's the topic today, just like I already said, actually, yeah, at top of the Bollinger Bands, you profits. At the bottom, that's when you enter into the trade.
Yes, sir. But yeah, I was about to say, you can also look at this like support and resistance as well. When you're looking at the Bollinger Bands, the lower band is basically the support for the Bollinger Bands, and the upper band is basically the resistance.
Fact.
Like it looked like a different chart, but it's basically the same thing. They're just doing different math on different whatever's going on with the stock on some. So basically, that's what it is. And this the every 2 months, yeah.
So I'll pull up my screen and show an example. You can go ahead.
Yeah.
Real quick. And if y'all got any questions while we talking, just put them in the chat, man. We'll be more than happy to go ahead and answer any questions y'all got, man. We want everybody to get this game, man. Because
yeah, for sure. I'm trying to be like as clear as possible with it so everybody can understand it, man.
And then even if they don't understand it, just ask questions, y'all. We do not mind answering questions. That's what we're here for. Man. We want y'all to know what we know. And if y'all know something we don't know, let us know.
Right.
I want everybody to know, be in the know and make money off of this.
I think you already host. You can just
okay, it's back on me. All right, let me get it up. Yeah. All right, we back to the. All right, ready now. So let me show y'all how to do the Bollinger Bands now. It's the same thing. You want to go up here to the top, the FX, find the indicators, click on that, and then you type in, you can type in BB, and Bollinger Bands should pop up just like this. Bollinger Bands right here. This is the one you want. Click on it, boom, they appear. You know what? I already had, that's how you do it. I'm going to take these off because I already had some on here. I edited myself. These are my Bollinger Bands right here. These are the ones I use. You can setting on these two to look like this. All you do is just go to this setting bar right here. Settings, this little wheel, then it pop up, and you can change it to make it look however you want. Man, why my stuff ain't showing? Like, I don't know why they ain't pulling them nothing today.
I actually could see yours way better. Like Derek's kind, you couldn't really see it.
Yeah, because I edited it. Yeah, I edited it. And this is how you do it. But for some reason, mine ain't even popping up right now. But all you do is go to this wheel and they show you the lines. And all you do is just change the color, change the thickness of the lines.
Right.
It's pretty easy, you know. But that's how you do it. You click on settings and it'll all pop up for you. So, okay, so a good example. You see, boom, look, it's at the top. Like, and we're not saying if it's at the top of the Bollinger Bands, it's guaranteed to fall. Nothing is guaranteed in the market. Nothing.
Yeah, for sure. Especially this Dogecoin. There's so much anticipation on Dogecoin right now.
Yeah, the hype is too high about it right now. So like,
sure,
really just go crazy. But typically, when it's at the top, you know what I mean, you want to sell or you don't want to buy. Yeah. But you can see right here, it was at the top right here, and it just kept going. It fell. It went up here and it fell, but it still kept running. So we're not saying always fall or it's going to immediately fall, but a rule of thumb is if it's at the top of the Bollinger Band, you shouldn't buy it. You know what I mean? Or you should be selling your position and waiting for the dip to get back in. If you
like right now it's hitting the bottom.
It's in the bottom. And I'm waiting for it. I'm waiting for it to hit that support. I got a limit buy down here at like 50 something. So as soon as that goes through, let me get my shares and I'm gonna ride.
It's probably gonna happen for sure.
Oh yeah, I already know it is. I ain't worried about that. And I'm just gonna sell it. I'm gonna let it hit 50. When it go back up to 60, I'm gonna sell. You know what I mean? Because look, Bollinger Band say, the top of the Bollinger Band like 62. So by the time it come down some more, the top will probably be at like $60.
Yeah.
You know what I mean? So that's gonna be a good little swing trade.
Man, I didn't even know it touched 70 almost.
Yeah, 60.
I didn't even know.
It did, man. I know, man.
Dogecoin running, man. They said
you crazy, man.
If you would have put $25 in Doge last year, right now you'd have been up 7 bands. What?
It's crazy.
Like,
I don't even like talking like that, bro, because you already know what happened with me, bro. So I don't even like talk about this.
Come on now, man.
I done got my mom in the Doge. Stop playing, man. Put a little bit in there and just let it sit, man. Let it marinate.
Yeah. Like for the people that want to get in now. get in and hold, man.
Yeah,
Hold
just
for the
hold.
long term. Don't even worry about it. Just look at it, and don't even look at it. Like just
Yeah.
buy it
And don't trip if it go down, because it's gonna go down. Like,
and
don't,
yeah.
you know what I mean? You holding it long term, so don't panic. Just let it make its move, and just hold out. Cause I can tell you right now, we didn't hold out.
Definitely, man.
Anyways, man. So look, Bollinger Bands, man. Look, it was at the top, man. It fell all the way to the bottom right here, like all the way
Yeah,
to the bottom.
definitely did touched it too. Right
Yeah,
on point.
and worked his way back to the top. You know what I mean? Come back down again. So, this is a good example of how it worked in the Bollinger Bands. Even here, like, it ain't gotta go to the bottom. It can even come to this 20 EMA. This the 20-day moving average. You know what
Right.
I
Yeah.
mean? So, or I'm on a minute. So I think it's might be 20-minute moving average. The day right here. Yeah, see, that's the 20-day move. Look, it's so far
Oh
from the
my
20
gosh.
moving average. But like, that's
And
coming.
if you peep, that's the hammer candle.
Exactly, bro.
It's about
Like,
to run.
man.
It's about to
But
go to work.
but that's
Real.
a red hammer candle, so it's less bullish.
Right.
It's less bullish, meaning like it ain't gonna run as hot. And look, it's a double top, bro. That boy falling, Garrett, man. It's
Oh
falling.
yeah.
Look,
It
this is a
definitely
double
is.
top, y'all. This is a perfect example of a double top.
And
It
it's if
run
the
up.
green candle is bigger than the red candle, is at the top, right? And it's on its way back down.
Um,
Or do you need two of them in a row for that? Or
yeah, so I'll explain it right now. So look, a double top is when like a stock closes or opens at the same, like close to the same point. So this
right.
stock right here, this blue candle right here, the green candle, I said blue. The green candle closed at 65 cents right here. And then the very next day candle,
Yeah.
the red
Over
candle
the
closed at
same.
like 64. That's a double top.
Yeah.
You know what I mean? Or it opened at 64. So usually when you see that, that means they don't want to go no higher right now. And it's the
Right.
same thing for the bottom. It's a double bottom. You know what I mean? A double bottom would be these right here. Look at this right here. They look at how all these candles is around the same area. This is double, triple bottom for real. Like, and look how I reverse right after. You know what I mean? Quadruple. It's 400. That's early warning signs. Like, oh, we ain't going down no more. We ready to reverse. And that's exactly what it's doing at the top. It create that double top. Now we're gonna go down for a little bit. Probably come down to the bottom of the channel, about 40. I'm copping that 40 for sure, and I'm gonna ride it back up. And I'm gonna sell at 70, something like that, and do it again and keep
Yes,
doing
sir.
it. Yeah, I mean, but yeah, so yeah, this just keep in mind on these Bollinger Bands, this middle line, this yellow line, or whatever color it's gonna be, that is the 20 moving average. And like I said, we on the day time frame, so this is the 20-day moving average. But if we go to the hour time frame, this would be the 20-hour moving average. So you see why it's under it this time, because this is in versus the day. And then you get minutes, 30-minute moving average. You know what I mean? So that's what this middle line is on the Bollinger Bands. And it's also considered support and resistance. So you see how it's down here below, hit it. Now that was resistance, come down, resistance, so just keep that in mind too. And yeah, we told y'all how to take profits on that. It's if it was at the top of the Bollinger Bands, take your money. You ain't got to be greedy. Get up out of there. Wait for it to
Yeah,
come back
man.
down. It was at the bottom. That's a good entry. Let me get in there. I ain't got to go full. I ain't got to go all in. I ain't got to pay all my bread when it's at the bottom, but I can throw a few chips at it. And if it go down some more, I can get some more. And if it go down some more, I can get a little more. And I'm ready for it to run up now. Versus throwing the bag at it, then it fall $5 and you looking crazy. Like,
I got to average down, man, by the
yeah.
dip.
Yeah, by the dip, that too, man. That's that's all relevant. So before we I just want to tell y'all a quick little a nice profit taking strategy since we're talking about profit today. So let me give y'all an actual example. So on this, I told you I've been scalping this. So if it go up 10 cents or if it go down 10 cents, I'm buying. And then when it run up 10 cents, I'm selling. That's called sky. Quick trades. I could do that in 5 minutes, in and out, and make some money. So first of all, you would need a trading plan. In the trading plans later. But as far as profit taking, so before I make any trade, I want to know, what am I going to do if the stock go up? What am I going to do if the stock go down? So that's what a trading plan is. What I plan to do if it go up, what I plan to do if it go down. So I don't be stuck or froze when it don't go my way. I need to already have it mapped out before I even buy it. So with profit taking, it's the same thing. You need to already know where you're going to take profit. So it ain't you don't get greedy. Because that's when you usually lose, when you be like, oh, I can make another 100, I can make another 1,000. Man, the market going to take your joint before you can even get up out of there. So, a good way to take profit is like, so if I would have bought it down here at the bottom, I can expect like, all right, the move I'm looking for is for it to go to the top of the channel. And that's when I'm going to sell it at the top of the channel. So if I'm getting it right here, this is exactly how I do it. I'd be like, well, right now it's at 25. I'm expecting it to work its way up to the top and hit like 50. So I'll buy a lot at 25. And then once it go up a little bit, say I buy 100 shares at 25. Once it go up to like right here, just a little bit, once it go my direction, I'm selling 1/3 of my position. I'm selling 30 shares, 33 shares out of the 100 I bought. I'm selling 33 right here off top. I just want to take some profits initially, so I don't feel bad if I lose it all. And then since I said that I wanted to go up, once it hit this top, that's when I'm gonna sell another 30 shares, another 33 shares. I'm gonna sell another 33 shares up here. So I done sold 60 shares once it made the complete move. By then, I should have got all my money back that I put in, plus a little bit of profits. Now, at this point, anything I get after this is all extra. Everything is extra. And what I would do is I would put a stop loss in, which we're going to talk about that too. Man, we got a lot to tell these people.
Yeah, for real, man.
But
real,
yeah, then
I
would put my stop loss in at my entry point, which is down here. So now, since I done sold 60 shares and made some money off of this move to up here, now when I got 30, or I sold 66 shares, now I got 30. Now when it make this move up here, I sell the last 33. But if it don't go that way and it decide to come down, it's gonna sell automatically. If I put a stop loss on, it's gonna sell automatically when it come back to where I got in at, which is right here at 25.
And you get that same amount without losing nothing.
Right. So them last 33 shares, you can take and say, all right, well, if it go up some more, I can get some more bread. And if it go down back to my entry point, I don't lose nothing. I already made my money. Now it's risk free. Now I'm playing with the house money.
You literally keep that in there. Just keep that in there forever.
Yeah, we playing with the
house. What Bitcoin might do.
Exactly, bro. And that's what I do when I scout, bro. That's exactly what I do, bro. I do it just like that. I buy down. I take a little quick profits right here. When it get to where I want, I take another big chunk of profits and I let the rest of it ride. And then when it did back here, I buy some more. And I do it again. And that last third that I save every time, I just let that add up for the long run. You know what I mean? But that's a good profit-taking strategy, man, because if you ain't got no plan to take profits, majority of the time, you're not going to take them. You just not. It's, man, our nature is to, get as much as we can. That's just what we do. Like, we capitalize on everything. It's a capitalistic society. So we like, instead of taking that $100, let me get 150. Bruh, take your $100 and get out the way, bruh, for this market do you bad.
Yeah. Or you can do like you said, 1/3. You know what I'm saying? Do the 1/3 strategy. Run up a little bit, just sell a little bit. You know what I'm saying? You ain't gotta wait for it to go back up and try to get a lot. Just get a little bit now, get your initial investment back, what you initially invested. Yep. You know what I'm saying? Like bro was saying, go up a little bit more, sell a little bit more, put it on your limit, sell. Mm-hmm. If it go back down to where you bought it at, that's your limit sell. It's gonna automatically sell itself, so you won't lose nothing. by that time, you done already made your initial investment back.
Yeah.
On something. So you ain't got to worry about nothing. You just got free cheese running up for you. If it go back down to the price you bought it, you broke even. If it keep running back up, you made cheese. You already got your bread back.
Yeah.
Making cheese now, like
that, man.
Yeah, that's a good strategy, man.
Yeah, I actually just learned this strategy myself, man. I was just reading this book, Trading in the Zone, man. I really recommend that book. That book is fire, man. It got a lot of good information for being a consistent trader, man. Like, you really need to lock in if you're gonna make money every day in this market. Period.
Yeah.
If you're not focused and disciplined, it's gonna be hard to in here every day. And for you to be a day trader, bro, you just gotta be disciplined. And part of being disciplined is having a plan, knowing what you're gonna do when it do something.
Real.
And that's a solid plan.
Even if you were not a day trader, it's good to just still know the knowledge on something. Because I'm not a day trader. I'll probably make a few trades every few days or something like that. But and like in general, I'm not a day trader. I'm a long-term dividend investor. So I just still know the knowledge. So whenever I'm getting into a day trade or something like that, I already know. You know what I'm saying? So it's good to know the knowledge for sure.
But this applies to all trading though. This apply to stocks, long-term hold, all that, because you know what I mean? Even if I'm doing stocks and I buy a bunch of shares at the bottom of the channel, like at some point I want to take some profits. If it's like halfway, let me get some of that. You know what I mean? Then when it's at the top, I want to get a lot more. And then if it keep going past the channel, then I'll be like, all right, do whatever, because now there's house money. I got all my bread back plus some. Now, if I lose this, I ain't lose $1. This is their money at this point. So I could take my chances on the last of that and then take that profit when I'm ready, you know? So you can do this with stocks. You can do this with options. You know what I mean? You can do this with ETFs, all that, dividends, all of that. I probably want to do it with dividends though.
You gotta hold them dividends.
Yeah,
man.
dividends a different breed, bro. That's a different breed. But yeah, man, just be weary, man. I told y'all this is double top. This is on the day, so it's a double top as of now, but the day is not over with yet. So this candle can keep going up. Yeah, I mean, we still got a lot more hours in the day. So if this candle keep going down, it's definitely a double top, and it's probably gonna keep going down. So just know that. But if it go past this 65, whatever this is, I'll chill and let it run up. You know what I mean? But don't say I ain't tell you it's at a double top right now. And when they dip down here to like 50, 45 and all that, don't be like, oh, I'm losing. Be cool. It's going to the bottom of the channel and it's gonna run up again. So don't panic.
Yeah, for sure. But like bro was saying, man, if y'all want to day trade, take them profits, man. Like that strategy, that's a good strategy. And right now, a market like this, 2021, all these new investors, stimulus checks, everybody got bread to throw in the market. A lot of stuff is overbought.
Facts.
Take them profits, man. It's already overbought, man. Take them profits, take your initial investment out, and if it keep running, it's gonna keep running. You know what I'm saying?
Play with the house's money, man. Don't play with your.
Yeah, for real.
The name of the game is don't lose your money. Like, as long as you don't lose all your bread, you win the game and you can keep learning and you can get better. But if you lose all your bread, most likely you're gonna get discouraged and then you don't even
try not to lose none. That's my strategy. That's Warren Buffett's strategy that he taught me. Don't lose no money. You gonna win. It's that simple. You can cash out $1. You can be up $1 as long as you won. That's the whole thing about it. Like,
and imagine trading your whole life. You can trade your whole life, do a million plays, and make $1 million or make a dollar a play. That's $1 million.
Yeah. Whole time you learning knowledge, getting the knowledge. You know what I'm saying? You ain't losing.
And eventually you're gonna get better. Like that's no question about that. You know what I mean? So yeah, man. So yeah, that's our take on profit taking and how to use these indicators to help you decide, like, all right, let me take some money off the table. You know what I mean? If it do go down, I ain't losing anything I put into it. You know, so that's how you cover your butt and live to trade another day. Because that's what these about. Live to trade another day, bro. Because we get ugly in this market if you don't know what you do.
Really?
Bro, like, I'm not even gonna hold you, man. But you got a quote for the day, man, to close us out, big dog.
I wasn't even able to find one, man. A good one, man.
So we got one that say
for
they
the day.
lost. Go
You said
back and
what?
watch more videos. What exactly was you lost on, Melina Roberson?
Oh yeah, that's Mom Dukes. Yeah, she said she lost, man. She got to catch up on the video. I got the comments pulled up.
Yeah, she said she got to go back and watch the more videos because, that everything we talked about today was at least touched on a little bit in the other videos. So that'll definitely help going back watching them other ones. We talk about the, support and resistance and, the basics to charting. So yeah, I would definitely that. But if you got a question right now, we can definitely answer it before we get up out of here and hit them with the quote of the day. And, just let us know.
It was a good video though, man.
Yes, it was, man. Yeah, go ahead, hit him with that quote, bro. So we can get going. It's already been 45 minutes.
Let me find one right quick. Find a good one that'll relate to what we're talking about.
Taking profits, or not getting greedy or something, man. Cause man, you'll be surprised, man. That's the hardest thing in the market. It's taking profits. It's crazy. It's I don't know, man. No.
Yeah, if anybody new here, subscribe, like the video, man, if y'all can.
Show like that video, man. If you up in here, I mean, video one time. If you got any questions, let us know. If you caught the end of the video, make sure you go back and watch it, man, because this is an important video. Taking profits is the name of the game in the stock market. If you don't take profits, you're doing it for nothing. So learn this skill. If any skill, you gotta learn this skill, man. Anybody I talk to, like I preach, man, take your profits. Bro, real quick, before you give them the quote, tell them how much money you made in the last 5 minutes of the market, bro. Like,
bro, literally the last 4 minutes, actually.
4 minutes.
Bro. It's not no crazy amount. It was only like $75, $80, but 4 minutes
In 4 minutes.
Tesla, like, man.
Quickest $80 you ever made, probably, like.
Man, for real, like I took them profits fast, like
in and out, like
real. Yes. But I got two good ones right quick. Nice.
Hit them with a big dog.
Quote of the day, right quick. Okay, so the first one, the riskiest thing you can do is get greedy. Off rip. That's the riskiest thing you can do. You know what I'm saying? Like off rip. And the other one is you want to be greedy when others are fearful.
Yes.
On some. So you want to be greedy when others are fearful.
Yeah. And what that means is when the market crashed and everybody was scared and running, that's when you get greedy and let me get all that. Catch that sale.
Man, people made millions, bro, since last year. They said the richer than got even more richer, like $1 billion, man. I don't even know, man.
Yeah. And it's the same, and it's vice versa too. Like when people are greedy, when the majority of the market is greedy, you need to be fearful.
Right.
You need to be scaling back and selling.
Right.
Because it's too many people being greedy. Like
not supposed to follow the crowd, man.
They getting out the way. Yeah. Be a wolf. Don't be a sheep, bro. Don't be a sheep. Sheep get slaughtered in the market.
For real.
Don't be a sheep. They get slaughtered in the market, bro.
Facts. Real.
So, yeah, that was some good quotes, bro. Appreciate that, man. Appreciate everybody that tapped in, man. Y'all on Sunday for Money Talk Sunday. Come with y'all questions. We're gonna answer any questions y'all got. We're gonna review everything we talked about this week. Chart that. So
I'm gonna go ahead and show my dividends as well on Sunday too,
so
y'all can see what I'm investing in and all that.
Right.
Dividend payments and
and I'll show a few of my trades I made this week that I was profitable on. I might even show y'all some L's, because you don't win them all. You just don't.
Yeah, definitely.
And if somebody can remind me on the video, I want to address how people think that the stock market is a casino. I ain't gonna do it now. We've been on here for an hour now, so
man, Forex is the casino, man.
Yeah, just bring that up next episode, bro, and I would gladly dive, man, because
I'm gonna write that down, man, so we can get into that, man.
Yeah, because that book.
A lot of people think it's a gamble. It's really not. You know,
I'm telling you, man. It's levels to this, man. It's levels.
We
But
definitely been on here for an hour though.
I know, right? Yeah, we got it, man. Let's
All
go.
right, man. We out, y'all. We gonna be in here on Sunday, man.
Most
Like the
definitely,
video,
man.
subscribe. We out.
Money Talk Sunday.